What's up, everybody? How's it going? Nice to see you all on this nice Sunday night. I see a couple people in here already. Jawa, what is up, man? Rock Edison, haven't seen you before. Super happy to see you. And absolutely happy up and to the right. It's been a good day. Not just good day, good couple of days for Echo. Okay, hold on. Let me see if I can fix it. All right. Thanks everybody. I think I got it all figured out. Greg B, really great to see you in here. Crypto Mindset OG in the chat. Great to see you. Miracle 13, also great to see you. QD Crypto, welcome, welcome, welcome. So today we are going to talk a little bit about the launch of Pulsechain and how to potentially ratio trade when it launches. There's been a lot of talk in the community about, what's going to happen pre-bridge when there's no dollar valuation because Pulse Chain hasn't been integrated with or backed by like Ethereum or any other blockchain. And I just had a small idea one night that I wanted to share with you guys about how you could potentially ratio trade if you were interested in it pre-bridge. Now, I will say before getting into this, it is risky and there is the opportunity to lose a lot of value going forward versus if you just held. However, I think it is important to talk about how we can safely go about potentially capitalizing on the opportunities ahead of us because the launch of a new chain before any kind of dollar value it backs any of these coins is a very unique opportunity and very educational, and I think just participating in it in a safe way that mitigates risk is valuable because as we all know, we're so early in this crypto space and we're so early to things like Hex and Pulse Chain. I mean, it hasn't even launched. These experiences are going to be the building blocks for our future success in the crypto space. If there are more forks, more blockchains that launch in the future. So I think learning how to participate in these opportunities while managing our risk is very important, and that's what I'm going to be talking to you about today. So let's go ahead and pull up the slide deck. All right, so ratio trading the Pulse chain launch. So what is happening? Let's do this. Yeah. So what is happening? Well, Pulse chain is going to launch. There is going to be a hard fork of Ethereum where we're going to get a copy of all of our ERC20s as PRC20s. And there's going to be a decentralized exchange called PulseX where trading will be available. Some people will have everything. Some people will not. And you can see this is evident for people who sacrificed heavier on the Pulse X sacrifice because they weren't able to get in on the Pulse chain sacrifice. So some people have sacrificed for Pulse, they'll have it on launch. Some people also sacrifice for Pulse X, they'll have both on launch. Some only sacrifice for one, so they may want to get the other. And pre-bridge, ratio trading is how people will get what they want from what they have. And like I said, pre-bridge, this is the only way to get what you want, ratio trading. Since there are no dollar values and you can't bridge any kind of USDC, stablecoin, Ethereum, Bitcoin, you're not going to be able to bridge this stuff over on the first couple of days. So this is the only way to get what you want immediately. It's by ratio trading. Other than that, you're going to just have to be patient and give you whatever the market price is at the time of the bridge opening. So we will all have some combination of the following coins: EHEX, PHEX, Pulse, PulseX, Hadron, PHadron, and whatever other ERC20 coins that are being copied over. But these are kind of the main five that are gonna exist. And so those who are lacking in one or more tokens want what they don't have. And the example I just gave was lots of people did not sacrifice for Pulse, so they went in heavier into Pulse X to swap for Pulse. And so this strategy that I'm going to be telling you guys about is good if you have all of the coins, or if you are missing one and want to try to get another one. So what is the strategy? Well, it's quite simple. Just do the opposite of what everybody else is doing. That's pretty much it. You know, if the market is saying that they value Pulse more than Pulse X, i.e., for example, the main strategy that's been going around is that a lot of people are going to swap their PLSX for Pulse, and so the ratio of PLS to Pulse is going to favor heavier on the Pulse side. So we're just going to do the opposite. We're just going to, and we'll talk about that in a minute. But the second part of the strategy is to only swing trade with 10% of your bag max. And that is very important to the strategy because it's just risk management. We don't want to be risking our entire stack of these coins that we all know are going to just do incredible X's, not only for years to come, but within the first year. And we really don't want to miss out on a lot of that, trying to capitalize and extract as much value as possible. Because, I know all of us here, we're all genius traders and we're all just, giga brain chads that can just extrapolate, all the max value from the market. But, for everybody else, my recommendation and this strategy is only 10% of your bag for wherever you're ratio trading. So, with that strategy in place, this is the main assumption underlying the strategy. And if you don't agree with this assumption, or during the launch pre-bridge, there's some market structure or whatever the market is giving us invalidates this assumption, the entire strategy is void. So I want you to keep that in mind. And this main assumption is that if there is a large impulse in a coin pairing, the market is more probably overvaluing the asset being bought than undervaluing it. And that's pretty much the basis by which this strategy works from. We are just going to say if the value of one coin relative to the other goes up, i.e., people are trading one coin to buy the other, they are more probably overvaluing that asset than undervaluing it. So let's go through an example of this strategy and how it would work with completely fake numbers that definitely 100% won't happen. And this strategy assumes that you own both of the coins that you're interested in ratio trading. So let's say we have 100K PLSX and 100K Pulse. Sorry. Yes, no pun intended, Java. You have 100K Pulse X and 100K Pulse. So let's say, when it starts out, initial liquidity is provided and the Pulse X ratio is 1 to 1. You can put in one Pulse X, get one Pulse, and vice versa. And then let's say, as everybody in the community has kind of been talking about, the ratio moves from 1 to 4. So it would take 4 Pulse X to get one Pulse, or one Pulse to get 4 Pulse X. So what this is telling us, what the market is telling us, is that people are valuing Pulse more than Pulse X. And so with the strategy that I'm presenting, I just say, do the opposite. We'll take 10% of our Pulse bag, say it's 10,000 Pulse in this example, and we'll get 40,000 Pulse X. So now we have 90,000 Pulse and 140,000 Pulse X. And then let's say our assumption is correct. This 1 to 4 ratio is overvalued. So maybe post bridge or even, pre bridge, say it crashes down the ratio to 1 to 2, 50%. Then you just take, 20,000 of your Pulse X, re-grab your principal, de-risking that position. And now at the end, you have 100,000 Pulse and 120,000 Pulse X. And our net profit for this scenario is increasing our PLS bag by 20%. Of course, that all sounds great What actually will happen will be very different, but this is an example of how the strategy would work if our assumption remains true throughout this period. So, what are the risks? Oop, yeah, yeah, it's that easy. So, obviously, it's not actually that easy. What are the risks? And that is that the assumption is wrong and the ratio continues to move in the same direction. And so, instead of it going from 1 to 4 pulse to pulse X, it goes to 1 to 8, 1 to 10. It just keeps going and going and going, and you're never able to recoup or buy back in your pulse that you swapped, doing the opposite of what the market gave you. And this is what we call in crypto getting wrecked. You got left behind, you made a bad trade, you lost value. This is the risk by trying to ratio trade during this highly volatile and highly risky time period of the pulse chain ecosystem. But of course, there are also rewards. Um, there are also rewards because, when you're risking things, you're doing it for a reason and you're trying to get some value. So this is what it is. You will be significantly increasing the number of coins you have. And so when we get that, 1000, 2000x, whatever it may be, 50x even at the beginning, you have more coins to experience those multiples, which is awesome because you have 3 Lamborghinis instead of just one. And then also, if you didn't have the specific coin of, the Richard Hart Infinite 5 Infinity Stones, you get the coin that you don't have. Now, I do want to bring up a specific point because the strategy hinges on doing the opposite of whatever the market does. If it actually, if say you had Pulse X, but you didn't have Pulse, and it moves into the direction where you would want to trade the coin you don't have for the coin you do have, this strategy just simply won't work. I would not recommend utilizing the opposite of the strategy. So if you don't have the coin and that's the coin you need to sell in order to accumulate a coin, unfortunately, you're just out of luck. You'll have to find a different strategy to kind of figure it out. And also, I didn't mention this before, but this can work with any ratio for any coin that you want to get. So it doesn't have to be Pulse X. It could be maybe P hex versus Pulse X, uh, P hedron versus Pulse, whatever it might be. If you can find the chart, that shows the ratios, then this strategy could be implemented. All right, so let's look a little bit more at the cost benefit analysis of doing this strategy. You are risking a small portion of your bag to potentially gain a significant number of coins, which, that's up to you if you decide it's worth that risk. You limit the trading to only 10% so that if you are wrong, only 10% of your bag experiences a loss. And this is also a really important time to remember that we're ratio trading between just absolutely incredible assets that will go parabolic to degrees that our mind can't even comprehend right now. So yeah, you experience a 950x instead of 1000x, boohoo for you. Like, honestly, at the end of the day, this is all abundance. This is all yeah, this is all abundance. There is no losing here in the long run. We're just trying to learn a little bit. We're trying to maybe extract a little bit more value, and maybe the risk is worth it. And so yeah, this is a great opportunity to at least try ratio trading since these are all quality coins. And then this is a point that I actually think is really important. And I talked about it before I started the presentation, but the educational experience of this is invaluable. And this is something I actually don't see talked about in the Hex community or the crypto community as a whole. The value of education and using that in your cost benefit analysis in addition to price appreciation or potential price value loss or gains. Like I was saying before, we're so early in the space, and any kind of experience we can get, any kind of education we can get, any knowledge we can obtain will become exponentially more valuable as time goes on and more data is being added to the ecosystem as a whole. And so finally, this is just a personal preference to do the strategy. The default should be to do nothing. That is the default. And this is only an option for those that want to, explore the riskier side of things. And then finally, we can boil down the cost benefit analysis to this single question. Does the potential increase in bag size outweigh the risk of being on the wrong end of price movement? If the answer is yes, the strategy may be for you. If the answer is no, hodl your bags and experience the great price appreciation. And that is it. So Leah, let's go over if anybody has any questions. We'll stop sharing my screen. And yeah, so let's see. I'll stay on for a couple more minutes as if anybody has any questions. I'll start going through the chat. Crypto Heartbeat, hey, it's really great to see you on here, man. I enjoy your content and I appreciate your viewership. Let's see. It's not risky to do nothing, in my opinion. It's a safe bet. Correct. Doing nothing is the baseline. You do nothing, you get what the market gives you. Um, and that is enough. You don't need to do anything more. All of this is just icing. Absolutely. I do plan to talk more about LPing in the future. I think Hadron gives us really good liquidity providing opportunities and yield farming opportunities, as well as Maximus DAO. I don't know if you guys have heard of it, but it's a new protocol that's being developed. I believe they're just in the process of starting the audit process. So yeah, just go ahead, type into YouTube Maximus DAO. You'll see some great educational videos. At some point, I'll be talking about it. And this is a good time to bring up. I'm going to be gone for a solid month or so. My schedule's pretty booked. So this will be the last stream for a while, but if you stay tuned, I'll definitely be talking more, sharing more of my thoughts, strategies, etc. as time goes on. Let's see. Personally, are you aiming to DCA more into Pulse, PulseX, PHEX, or all three equally? Yeah, I haven't really decided on that. I don't really know or have an opinion on which one is better in terms of price appreciation than the other. Obviously, Hex long term is has the better value proposition just due to the monetization of the time value of money. But Pulse and Pulse X both have amazing value propositions on their own, and I think I'm just gonna wait and see what the market gives me, see how much dry powder I have, and then make the decision there. As I've been in crypto more and more, I'm realizing that I don't like pre-planning my moves out all too much. I like to just kind of assess what things are at the moment and make decisions at that time. It's just been a lot easier on me mentally, and I feel like I'm making better decisions when I just look at what's happening in the moment and instead of trying to predict everything that's about to happen. But yeah, um, all three, great strategy, just like doing nothing. Pulsechain is bound to do more X's than Hex for yeah, I agree. New coins generally outperform older coins during their initial launch phases, just because liquidity is lower. There's fewer people, so the network effect has more time, more room to grow the price. So yeah, I think that's a very probable outcome of what's going to happen. All right. Well, let's stop sharing this. Anybody else have any last minute thoughts? Any last minute questions? If not, I just want to express my appreciation to everybody who's spending this Sunday night with me. I appreciate you listening to my thoughts. I appreciate your engagement and participation in this kind of collective conversation that we're having before this great really great project is launched, blockchain financial opportunity. Um, that's it for me, and I'll end on this because I know a very controversial opinion, but I do believe the Earth is not flat. I don't know if it's exactly a sphere, but I am not a flat earther, Jawa. Maybe we can discuss that another time. All right, guys. Well, I'll catch you later on the next one. Take care. And good luck out there.